What's going on, and welcome back to another episode of The Mortgage Mindset. I'm your host, Trevor Otsuga, licensed mortgage advisor with Barrett Financial Group. I lend on commercial, residential, and private money for fix and flip. And today, we're rocking a solo show. We're going to dive right in here to the market update. So today is January 2nd. It's Thursday. Happy New Year to you. I hope that you had a blessed holiday season and that this year is going to bring you a ton of abundance and opportunity, both personally and professionally. And without further ado, here we are. Market update. Today's rates, 30-year fixed conventional is at 7.07% on a national average. 15-year fixed is at 6.47%. 30-year jumbo is at 7.30%. And then the 30-year FHA and 30-year VA are sitting at about 6.40%. Let's talk about econ data. The market was closed yesterday for New Year's Day and then a half day on New Year's Eve. Nothing huge. We had jobless claims that came in a little bit under expectations today. You also have ISM manufacturing PMI for December. That's going to come out tomorrow at 7 a.m. Next week is huge. There's a ton of stuff on the calendar. Monday, you have S&P Global Services PMI for December. That could move the market. Tuesday, you've got USA JOLTS job openings for November. You also have ISM business activity for December. ISM non-manufacturing PMI for December. Then on Wednesday, you have the FOMC minutes, which is basically them talking about a bunch of different stuff in regards to their projections for the market, kind of where we're at, the data that they're looking at. And then on Friday, massive day, January 10th, unemployment rate month over month for December. And then also the non-farms payroll jobs report for the month of December. So those have in the past moved the market pretty significantly as far as the bond market is concerned, and then treasury yields. So we'll be monitoring that. I will probably wait to do the podcast episode instead of doing it on Thursday like I normally do. I might wait and do it early Friday morning because these reports are going to come out at 5:30 a.m. Pacific Standard Time. That way I could give you an update as to where we landed on these reports, and hopefully I could do that right when the market opens. So this week's news article headline, Housing Wire is typically my favorite place to go and get this information from. And looking at this, you're going to see the article is titled, "The Two Big Housing Market Trends to Watch in 2025. So the key 3 points that I pulled from the article, the first one is going to be affordability remains a major challenge in 2025. Home prices nationally are up 4% year over year, and mortgage rates remain above 7%, making affordability a key issue for buyers. This is something that we've been struggling with over the course of the last 2 years with higher interest rates. There's less people that could qualify. The buying window kind of shrinks for a lot of people because maybe they're not making enough to qualify for the median average home price in their local market, just depending on where they're located. It says the typical mortgage payment has reached a record high of $2,290, emphasizing the financial strain on potential homeowners. Key point number 2 here is sellers begin returning to the market. While new listings remain low, there are early signs that seller activity is gradually returning to more normal levels, with December seeing a higher than usual number of new listings compared to past years. The increase in inventory could provide more opportunities for buyers in the first quarter of 2025. To me, that's great news. If more sellers are coming back into the market and we're getting more properties that are available, it could be great opportunity for buyers that are actually in the market to be able to get out there and negotiate some pretty good terms on acquisitions, maybe get some seller credit. And we can use the seller credit on the loan side. Man, we could use it in a variety of different ways. It's truly a game changer for buyers when we're able to secure some type of seller credit to help you with your closing costs, or even better, to improve your interest rate and therefore improve your monthly payment. We do still have temporary buy downs that are available through a majority of the lenders that are in the market, especially in the broker side of the world, which is where I live. I'm a broker. Barrett has over 113 different lenders that we could package up your loan and send them to, and a lot of them offer temporary buy down programs. Key point number 3 is home prices continue to defy affordability trends. Despite the affordability crisis, national home prices show no significant signs of correction and remain stable or slightly increasing. Price reductions have risen, with 36% of homes on the market experiencing cuts, signaling a slight imbalance in supply and demand, but not enough to bring overall prices down substantially. So reading that tells me that they don't really see that property values are going to start declining anytime soon. We'll see though, if there's more sellers that are coming into the market and the amount of listings are growing and the inventory supply is increasing by the number of months of supply that we have available. Obviously, each micro market is going to be a little bit different. The Vegas market is going to be different than the LA market, different than the Dallas Fort Worth market, different than Miami, Florida. So I think it just depends on where you're at, where you're located, and where you are looking to purchase. So that's pretty much it. I'll keep you guys posted about next Friday for the econ data that's going to be coming out. This is going to go out with the newsletter. All the links to the articles and then where you can find your daily interest rates will be included in the YouTube description below, and then also the podcast description with links. If you guys ever need anything, feel free to connect with me on Instagram. That's where I'm most active. My handle is just my name. It's Trevor Otsuka, TrevorOtsuka. And I look forward to connecting with you guys soon. We will see you next week.